What to expect in the real estate market in 2021? Are we going to see a crash? I know, it's hard to tell with everything that we have going on what the real story is with the real estate market. I get it. I've seen so many different markets over the last 20 years, and this has definitely been one of the more unprecedented and unfamiliar markets since I've started. This is Grimshaw with the Omaha Home Pros team at Better Homes and Gardens Real Estate. Now, if you look at the Housing Market Recovery Index, here's a graph from Realtor.com, you see a V-shaped market, which is just as predicted back in March when the pandemic started. The market has recovered, and it is even looking better than when the pandemic first started. Now, when we look nationally, back in March, we were at 106.5, and now we're at 112.8. Yes, there was definitely a dip in the housing market when the pandemic first started, but now, as you can see here, the market dipped and then took a strong and steady rise, and now we're stronger than we were back before last March. This analysis measures four things. One being the demand of homes, meaning the number of buyers who are wanting to buy. Number two, it measures the supply or the inventory, which is the number of homes on the market. And it also analyzes pricing. Are home prices going up or are they going down? Lastly, the Housing Recovery Index measures time on market. Inventory and interest rates are, in my opinion, some of the strongest indicators as to why we're seeing such an increase in housing activity. There's definitely been a lack of supply and high demand because interest rates are at all-time lows. Also, if you look at the number of active forbearances, and just to remind you, a forbearance is somebody who wasn't able to make their mortgage payment, and so now they've worked out some kind of a deferment with their bank. Now, those active forbearances have been declining each and every month. If we look at when homeowners exited their forbearance plan, you'll see that 54.6 are paid in full, 30.7 are still working out repayment plans with their mortgager, and just 14.7 are still maybe in trouble. And that's nationally. Locally, the numbers are even smaller. Now, is it possible that that 14.7% could still turn out to be a short sale or a foreclosure if they can't catch up on their forbearance? Possibly, but with the market still hot, and buyers actively looking, it's unlikely those homes would need to be sold as a foreclosure or a short sale. They can probably just sell it on the open market like anybody else and make a profit. Now, I'm always here to provide you information about the housing market and how it directly affects you because everybody's situation is different. Again, this is Grimshaw with the Omaha Home Pros team at Better Homes and Gardens Real Estate. Reach out to me even if you just have questions. I'm always happy to help. And remember, I want to be your resource for all things real estate.